Hello, my name is Akshay Vaghela and I'm a Senior Associate here at WestBridge Tax.
Hello, my name is Tom Moore. I'm a Director and the original founder of WestBridge Group.
Welcome to Bridging the Gap. It's the second episode, and for those of you tuned into the first, I think we promised that we would do a podcast on management buyouts. However, there have been some interesting issues in the news regarding Rishi Sunak, and we'd like to cover that instead.
I think a sensible choice of topic.
So let's not waste any time. What is a non-dom, Tom?
Okay, well, this is a concept which will confuse a lot of people, and to be honest, has clearly confused some journalists. A non-dom, a non-domiciled individual, is somebody who can trace their roots back to a jurisdiction that is not the UK. That's all it is. So kind of your domicile is where your roots are. And domicile is significant for tax purposes. But there are other concepts in tax that are important as well, the main one being residence. And your residence, which is really where you live, can be different from your domicile. So in other words, you can live in the UK, you can spend all your time here in the UK, but you may still trace your roots back to another jurisdiction. And that means that your domicile could be outside the UK. It's different as well from citizenship. So you may be a citizen of the UK, you may have a passport, that's a UK passport, or you may have citizenship elsewhere, but your roots could be somewhere else again. So really domicile is to do with where your roots are, things like where you own a property, things like where you have a passport, things like where your wider family reside. These may be evidential of having your roots somewhere else, but they don't prove anything.
So when you're born, you acquire what's known as a domicile of origin, and that is based on your father's domicile, which is quite an odd concept.
Yeah, it is. It's a really unusual concept, and this is something that most people aren't really aware of, because not only is it your father's domicile, you assume, it's your father's domicile at that point in time, and that may have changed after that time, but that still wouldn't affect your domicile. It may not be the place where you were born. It may not be where your father was born. And I'll give you a rather silly real-life example, if I may. If I take my own example, my parents were born in Ireland. They came over to live and work in Leicester in the 1950s. And I was born in Leicester in the 60s. And now at that point, I will have assumed my father's domicile. Now, what was his domicile? Well, that kind of depends on what his plans were, because he will have had a domicile of origin in Ireland. He may have lost that domicile of origin by deciding to live permanently in the UK. But what if he hadn't when I was born? That means that at that point, I started off with the domicile of origin in Ireland, not in the UK, even though I was born in the UK. If I didn't ever decide to live in the UK permanently, if I never developed an intention to stay here, if I always harboured a desire to go and live in Ireland, or in fact anywhere, believe it or not, then I may never have changed that domicile. And I may still have a domicile of origin in Ireland, notwithstanding the fact that I haven't been educated in Ireland, that I haven't worked in Ireland, that I've not been to Ireland much, apart from the occasional family visit. Now, I say it's a silly example because it's a fictitious example. I do have a domicile in the UK because, as far as I'm concerned, I'm staying here permanently. I've got no intentions to be going anywhere else. So that means that I have taken on a domicile of choice in the UK, but that isn't necessarily the case. You have to look back to where your father was domiciled at the point of your birth. That's if your parents were married. If your parents were unmarried when you were born, then it's your mother's domicile, and the same applies if, unfortunately, your father happened to die between conception and your birth.
So your domicile then determines how you're treated for tax purposes. So are you treated differently if you're non-domicile?
You can be, and this is where things get a bit complicated. And the rules are different depending on which tax we are considering. And to summarise it, I'll cover three taxes and I'll explain how the domicile rules apply to each of those taxes. And the three taxes I'm going to mention are income tax, capital gains tax, CGT as we normally call it, and inheritance tax, or IHT as we normally refer to it. Now, the one that's been in the news is income tax, isn't it? For income tax purposes, If you are domiciled outside the UK and subject to other points, which I'll mention in a moment, then you are only taxed on income arising in the UK. Someone who's domiciled in the UK, so the vast majority of people who are taxable in the UK are taxable on every penny they earn wherever in the world. They're taxable on their worldwide income. So if you happen to own a rental property in France that produces income, you're taxable here. If you happen to have shares in a company in Australia and you get a dividend, you're taxable here. The concept there is being taxable on your worldwide income. A non-domiciled individual is taxable only on their UK source income. A very similar rule applies for capital gains tax. Most individuals who are domiciled in the UK are taxable on worldwide gains. If you sell a property in Germany, then the gain on that will be taxable in the UK. If you sell some shares in a company in New Zealand, the gain on those will be taxable in the UK. But for a non-domiciled individual, that isn't the case. Those gains will only be taxable if you remit the proceeds. The income on the first example will only be taxable if you remit that income. I'll come on to that in a moment. Now, for both income tax and capital gains tax, there's another wrinkle that you need to be aware of. You have to pay for the privilege of being treated in that way. And what you pay for that privilege depends upon how long you've been resident in the UK. So if you've been resident in the UK for 7 out of the last 9 years, you'll have to pay £30,000 a year for the privilege of being taxed under those special rules. Actually, that gets reduced if the tax saving you're getting from that is only a lesser amount. If you've been resident in the UK for 12 out of the last 14 years, it's a £60,000 a year fee. So these tend to be fees that are paid by people who really have quite significant income or gains outside the UK. It's a choice you can make year on year, but you can choose to be taxed in that way. For inheritance tax, again, most people, when they die, their estate suffers tax on all the assets wherever they're situated, whether they're in the UK, the Channel Islands, France, anywhere. For a non-domiciled individual, they're again only taxed on what are called their UK situs, the UK situated assets. They're taxable on, their estate is taxable on those assets that are in the UK, not assets that are situated elsewhere. For all three taxes, it gets different once you've been in the UK for 15 years, 15 out of the last 20 years technically. And what happens is, even if legally you're domiciled outside the UK tax system treats you as though you're domiciled in the UK. There's a further wrinkle, which oddly enough is relevant to the case that's been in the news. For people who can trace their domicile to India or Pakistan, I can't think of any other countries where this is relevant, but those two countries it is. Then even if you have been resident in the UK for 15 of the last 20 years, for inheritance tax, your Indian or Pakistani situate assets can still fall outside UK tax under the terms of the double tax treaties with those two countries. So there are unusual double tax treaties that apply to those two jurisdictions. As I say, I've not come across any others. There may be others. I've not come across any others that apply elsewhere in the world. But in those two cases, those assets can stay outside UK inheritance tax if they are dealt with under the law of that jurisdiction. So normally, Indian clients who we're dealing with who can trace their domicile back to India will have a special Indian will that deals with the assets that are in India for that purpose, to make sure they're dealt with under Indian inheritance tax. And there doesn't happen to be any Indian inheritance tax, but that's still enough to mean they don't fall within UK inheritance tax. That would actually apply to Rishi Sunak's wife if she decided to put in place an Indian will to cover the assets that are situated there. So it is pretty complicated. And the one thing I mentioned at the start there was the concept of remittance. Any non-domiciliary who's paying the fee to fall within those special rules buys themselves the right to be treated under these special rules, but there's still a tax charge waiting to bite if they bring money from that income or those gains that haven't been taxed in the UK, if they bring them back into the UK. And remittance has a pretty broad definition, so it doesn't just mean physically bringing the cash into the UK, it covers other things as well. So overall, it's a pretty complicated set of circumstances, but they do occur quite commonly. There are an awful lot of people who will be residents in the UK and will be paying a lot of tax in the UK who actually will enjoy a non-UK domicile.
So just on what is actually known as the remittance basis charge, it depends on how many years you spend in the country. And of course, the longer you spend, the more you have to pay, essentially. So you have the first 6 years, which are free of a remittance basis charge. You can claim the remittance basis and only be taxed on your UK income. And then once you reach the 7-year point, providing that's been within 9 years.
9 years, yeah.
You have a £30,000 charge to pay for that privilege. And it's only worth paying that if your UK tax liability on your overseas income would be lower than £30,000.
Yeah.
And same for the second charge, which ensues on the 12th year.
That's entirely right, yeah.
So why are the rules this way?
Well, it's simply an incentive to encourage people who might otherwise not be so keen on making a home in the UK or working in the UK or investing in the UK. It's an incentive to encourage them to do so. And there are two ways of looking at it, I suppose. On the one hand, you could regard it as a specially designed tax incentive to encourage people to come here. I think the better way of thinking about it is it removes any tax disincentive for somebody to come here. So you might have somebody who's very, very wealthy. They think, yeah, I'd love to live in London, that'd be great. Or I'd love to invest in a particular business in the UK, that'd be great. But actually, they weigh up the tax burden that's going to impose upon them in making that choice, and they decide not to. And so it's been policy of successive governments to keep rules in place that mean that there is a removal of the fiscal disincentive for people to come to the UK and invest in the UK. And remember that very wealthy people tend to be fiscally mobile. They tend to be in a position where they can choose where they want their tax base to be. And the system is intended to remove that disincentive for people choosing the UK.
So just applying this back to Akshata Murthy, Mr. Sunak's wife, is this example of tax avoidance? Is she, by paying the remittance basis charge and not electing to tax her income in India, is this an example of tax avoidance?
It most certainly is not. Tax avoidance, how do you define tax avoidance? Tax avoidance really is securing a tax advantage within the wording of the rules, within the rule of the law, but in a way that was never really intended. It's, if you like, a loophole. It's when somebody spots a way the rules work and they think they can work them in their favour. This is not only within the law, it's squarely within the intention of the law. There is a policy intention for the rules to apply this way with a particular purpose in mind. And that having been debated in Parliament under successive governments, no government has taken the choice that it's sensible to remove that. It's been played with. So, for example, the charges that apply were introduced under David Cameron. So prior to that, you didn't have to pay anything to claim non-domiciled status. It was just there, and you could get the benefit of those special rules without having to pay any charge. So the rules have been tightened a little, but they've existed under successive governments, which suggests to me quite strongly that this is a well-visited, well-considered policy that's been tested by successive parliaments of different political colours, and it's withstood that test. So there's got to be a good reason for it being there. And overall, governments will have policies like this in place to overall increase the tax take compared to what it would be if the policy wasn't there.
And increase the tax take whilst incentivising more business and more people to come to the UK. So in your view, is Rishi Sunak's wife, Akshata Murthy, wrong to claim non-dom status?
Yeah, I knew you were going to ask me that, actually. But and, of course, here we're getting onto a question which isn't really to do with tax law. It gets into areas that are to do, I guess, with morality and ethics and politics and all those kind of things. She's certainly not wrong in any way to claim non-dom status. She is legally not domiciled in the UK. The rules allow her to be taxed in that way. About the only thing I suppose you could say is she is the wife of the holder of the second highest office that any individual can hold in the UK, certainly outside business. And she is saying that she's not sure if the UK is her permanent home. Now that then gets into the area that's debatable, doesn't it? And I do mean debatable, because people have different views on this.
Absolutely.
One view will be, well, that's her business. That's her husband who's decided to be Chancellor of the Exchequer, not her. Some people will say, what's wrong with somebody who isn't going to stay permanently in the UK holding the top office, or being related to somebody who holds the top office or the second top office? All these points are debatable. So I think if there is an area where you can debate it, at least that's where it would be. It's that in order to claim this status, you are effectively saying that you don't have a settled intention. You're not sure if the UK is your permanent home. And that would be the only place where I would say that anyone could debate this. In terms of whether it's right or wrong in terms of tax law, it is clearly within the tax law. It is clearly within the intention of the tax law and the intention of Parliament, and that's of successive governments. So it's difficult to point to anything that's wrong in that respect.
Definitely, and I think the journalism on this over the past couple of weeks has focused more on the morality and the ethical side of it, as opposed to the fact that she is not actually breaking any sort of laws.
And I think this is, here you're into a complete minefield, aren't you? A complete moral maze, a moral minefield, really. That always comes up in the arena of tax and the arena of differing levels of wealth, and beyond our pay grade, I'm afraid, Akshay. But it's bound to spark a lot of interesting debate in the media. But all we can do really is, when people ask us these things, is to at least focus on what the law really does and what the purpose of the law really is, and how that fits with these kind of circumstances. And I think there's been a little bit of confusion about that.
Certainly. Well, that was fantastic, Tom. Thanks for your time.
You're welcome. And if anybody does have any queries or any questions they have for anybody here, then please contact anybody at the WestBridge team.
Thank you.